We just showed the dollar, which has had quite a run over the past couple of years. It's up about 5% in that time. And to talk about which sectors make good investments when the greenback is strong, Joe Trevisani is a senior market analyst at FXStreet. 5% in 2 years is not that much, Joe. How strong is the dollar as far as you're concerned?
Well, historically, it's really not that. It's not out of line for this kind of movement and what we're seeing. It's unusual in the case that you have the Fed that's reducing rates or considering reducing rates more, yet the dollar is strengthening.
Right.
There are two things that generally affect the dollar. One, of course, interest rate policies vis-a-vis the central bank of the United States and other central banks. But you also have the general tenor of markets and the tone, and whenever people are worried,
risk on, risk off.
Precisely. Yeah. They will go to the dollar, they'll go to dollar investments.
Do you think the dollar, so you can say, all right, well, it's up about 5% the last couple of years, but what if it's about to go up 10 or 20%? I mean, what do you think is likely for the dollar from here?
From here, I would say maybe another 5%. I wouldn't say that you're going to get another 10 or 15 or 20% move. That seems a bit out of line from where the differentials are, as far as fear goes, as far as safety goes, and as far as the interest rates from the central banks.
Right. You have a couple of ideas about investments to make when the dollar is strong. And
right.
One I was struck by is you recommend consumer staples, which I thought got hurt by dollar strength.
Well, it does, but this is the way I look at it. If you're looking at investments, and especially here in the United States, then you have to go with the areas of the economy that are doing reasonably well. And one of the main areas that are doing well is the consumer sector.
Sure.
Consumers are still benefiting from the labor market. They're still benefiting from the best wage increases in about a decade. So the stronger dollar gives them generally more purchasing power.
Even if they're overseas, because people always say, oh, look at Colgate, look at these major companies. They have so much sales internationally. The value of those sales drops when the dollar strengthens.
I would certainly differentiate between companies that have a great deal of their income and a potential profit repatriation from overseas to companies which are more domestically based consumer items, consumer companies. Those companies will fare relatively well in this kind of situation. I mean, it's a questionable situation, as everyone knows, what the economy is actually going to do.
Or what the dollar's going to do, frankly.
What the dollar's going to do. But I think the dollar will necessarily get stronger simply because...
Even if the Fed keeps cutting rates?
Yes, because if the Fed cuts rates, so will everybody else.
Well, then what's the point?
That's true, but everyone is going to, if not defend their economies, defend their own currencies. I say they would start with their economies, and they'll say that's what they're doing. They're not specifically doing currency.
If the U.S. is the strongest house, we get a strong dollar. If we're the weakest and the world's falling apart, we get a strong dollar. The only way we get a weak dollar, it seems, is if we're doing okay, but everyone else starts to do a little bit better.
Absolutely.
Can we get to that sweet spot outcome if everyone else starts to cut rates?
It doesn't seem to be a place that we're going to go to anytime soon, I would say, in the next 6 months to a year. But you're absolutely right about your analysis about how the dollar, because of its reserve status, and also because of the United States' sort of preeminent position in safety and stability, it does tend to benefit on both sides.